Welcome to Global Tax Talk. I'm Chloe Fox. I recently had the opportunity to sit down with Edwin, Visser and Keetie, Jakma in Prague, where we recorded a series of videos looking at the 2025 EU tax agenda. In this video, we'll talk about investment and tax simplification in the EU. On investment, there have been findings that the capital markets in the EU are less liquid and more fragmented when compared to the US. Firstly, we'll hear from Keetie about how the Savings and Investment Union proposal attempts to try and solve this problem. Then we'll move on to the notion of tax decluttering. So when it comes to simplification, the EU simplification agenda relies on a four-principle approach. Firstly, reducing compliance burdens. Secondly, eliminating outdated rules. Thirdly, increasing legislative clarity. And then finally, improving procedural efficiency.
I think the communication of the European Commission focuses indeed on the Savings and Investments Union, and it is really stimulating and promoting the flow of savings and investments within the European Union. And based also on the Letta and Draghi report, they said it's still fragmented within the European Union. There are a lot of cross-border obstacles. And with this communication, they have several ideas and measures to lift up those distortions. And if we look at to this communication from a tax perspective, we see a chapter in this communication based, for example, for Visser and Deborah. And the European Commission mentioned that the Visser proposal, which is now adopted, the scope is a little bit narrower, and I think that's because of this market capitalization threshold. So there is still a little bit of fragmentation and not fully harmonized a Visser proposal. So there is still work to be done when we want to simplify withholding tax relief procedures.
Will that happen soon?
No, I think we heard also in Brussels that the European Commission thinks that taking next steps on this Visser proposal, that's not the right timing now. So they hope that the member states will take their role and put this proposal forward. But I think we cannot expect on the short term something on this particular topic from the European Commission. On the other way, they mention also other topics in this communication from a tax perspective. For example, they also mentioned that, for example, the beneficial ownership had the whole definition of that. They want to also more harmonize that concept. And from a tax perspective, we do have a lot of different interpretations, and not only from a withholding.
Quite ambitious, I would say.
Absolutely. No, absolutely. So if we take a look at the communication, you can't see it exactly, the exact wording, but we know insights, that subtitles of this communication is that they're really thinking about this concept. And at least start the discussion on harmonizing, at least thinking about this concept of beneficial ownership. Other thing, what you can see in this communication is, for example, also the qualification of legal entities. That differs also with member states. And you can imagine that if you're investing cross-border and you have different legal entities, and for example, the tax treatment of those legal entities differs, then also the tax treatment of your investment flows and your returns are taxed differently. So they want to remove that obstacles as well. What we can expect, maybe based on this communication, we do not know yet if it will be legislative proposals or non-legislative proposals. So you see that they're thinking about both. But I think at least from a non-tax perspective, for example, securitization rules, they will also want to simplify that. So everything boosting those cross-border investments.
Quite an ambition then, and something to watch closely for our clients, I think. Yeah, let's move to decluttering. It was mentioned a few times before, and let's be brief about that, Chloe, because you're hungry, you said. So what is decluttering about in the tax context? What does it mean?
Okay, so decluttering or simplification, whichever word you want to attach to it, it's ultimately about making the tax rules more simple from a tax compliance point of view. So what does that mean? Well, I suppose from the Commission's perspective, what they ultimately want to achieve is a 25% to a 30% reduction in the administrative burden the taxpayers are facing. Now, again, what I would say is that the Commission sees part of its role as being achieving this decluttering, but it also sees a role for the Member States.
No, but that's an interesting role for the Member States, because I think complexity is sometimes caused by the Member States itself. You have a directive and it's implemented in 27 different ways, which leads to a lot of complexity. Keetie, you worked at the Ministry of Finance in the Netherlands, and
No, sure. And I think from the European Commission side, they mentioned that I think based on European Union rules, they're taking part of 30% of this simplification, and member states, like you said, the implementation maybe takes 70%. So that means that the member state itself has a responsibility to implement those rules similar. I think from a tax perspective, we can expect something in the field of ATAT and the DAC. The Commission is starting an evaluation on that. So all the output from that evaluations, they will use it from simplification packages. But we cannot expect that this year. So probably there will be new legislative proposals next year, early next year.
That will be a DAC 10, if I understood correctly, in Brussels. That's what they said.
Could be. That will be endless, I would say. But I think that will be a good basis, at least to start the simplification. But again, I think if we talk about simplification, and as you mentioned already before, the Pillar 2 rules are super complex. So you can't approach the simplification agenda without thinking about Pillar 2. And I think from a European Union perspective, they want to tackle the European directives and regulation because that's the basis. But at the end, we also have Pillar 2. And although it is OECD based, and nevertheless, there is also, I think, room for improvement within the European Union.
Yeah, the European Commission now presents DAC 9, which is the implementation of the Global Information Return, as a sort of simplification. Do you agree with that, Chloe, or is that?
Personally, I don't see it as being a simplification. Like, essentially what it is they've taken the Global Information Return from the OECD rules. They have just changed it essentially into a directive and said that, this is how the rules will apply. These are the reporting requirements, which are still the same as the OECD requirements. I suppose one interesting point to just kind of bear in mind for that is that as the OECD Global Information Return changes, and it will change over time because we will have more guidance, or we might have additional data points that are required. The EU also plans to keep up to date in terms of those additional data points and information collection. The means by which it expects to do this is that the Commission will raise a proposal for essentially an amended version of the Global Information Return. It will then have to get unanimous approval from the EU Council to actually bring that into effect. So I think that will be an interesting one to watch. On DAC 9, what I think might actually be helpful from a decluttering or a simplification agenda is that it introduces an exchange of information mechanism so that member states can exchange with each other the DAC 9 report. Now that should make life a little bit easier for intra-community sharing of information, not so much from an external EU perspective, but again, we do have the Multilateral Competent Authority Agreement, which should help in terms of sharing of information to or from EU to non-EU countries. Anyway, lots more to come on this. For now, thank you for joining us. Come back next time so that you stay global tax ready.